Good morning and welcome to our podcast about lending to UAE foundations. I'm Hermione Harrison, Director and Head of Governance at MHQ, a UAE private wealth advisory firm. Good morning, David. Thank you for joining me today to discuss our recent UAE Foundation survey and key takeaways on lending to UAE foundations.
Morning.
But before we delve into the topic, let me introduce you first, David. So David is Group Head of GSB Private, a global wealth and asset management firm, and is responsible for the global operation and growth of the private banking private office and private finance areas of the business. We had the pleasure of meeting during the process of conducting a survey and now releasing a white paper on lending to UAE foundations. Our discussion on UAE foundations and lending started about mid last year, where we identified a common issue. So firstly, that foundations were becoming increasingly popular among high net worth and ultra high net worth families and individuals as the go-to tool for wealth structuring, legacy planning, and asset protection. But that secondly, lenders were slow to offer a lending product commensurate to the needs and the features of a foundation.
Yeah, morning, and thanks for having me on, Hermione. It's a pleasure to be invited on. So this was a real sort of source of frustration, obviously for the founders who were looking to use these structures, but also for us as intermediaries in this market. And we find ourselves sort of in this situation where the founders are blessed with this sort of creme de la creme of structuring tools, but unable to sort of smoothly leverage or borrow against them, which was becoming and is becoming more of an issue. So we sort of put our heads together. We realized that it was a bit of a missed opportunity for lenders too. So as part of the work we did, we wanted to launch a survey, find out a little bit more about what the local market was doing in this area, delve into the issue a little bit deeper, so that we could sort of come out the other end and help founders, but also just help the market in general. So kind of unsurprisingly, the results from the survey were quite eye-opening. And we've sort of put them together and summarized them in a recently launched white paper, which hopefully people will find interesting.
Yeah, absolutely. No, thanks very much for that, David. Absolutely. So let's look at, firstly, what is the structure of foundation? So we can recap that. So typically, a foundation is adopted by families or ultra high net worth individuals looking to consolidate their cross-border interests and wealth, which may consist of financial portfolios, real estate, equity, operational companies. It could be jewelry, cars, under an organized and secure structure. In fact, as of January this year, there are over 1,000 foundations in the UAE and counting, demonstrating the volume of interest and increasing volume of interest in the UAE in relation to the opportunity that a foundation presents for this category of people. So foundation is also compatible with a whole range of local and international assets, not just UAE assets, and sits at the top of the wealth structuring pyramid as what we see as the ultimate secure asset protection and legacy planning vehicle. So we've demonstrated here a depiction of a typical structure that we see with different foundations. So it could be a singular foundation, and then you've got the underlying assets below. Now, an interesting feature of a foundation, again, recapping on what are the features here, is that it's a hybrid of a trust and a company. It is constituted by a founder, but governed by a council. But better yet, and uniquely, it has separate legal personality in contrast to a trust. So foundations can also benefit most recently from tax transparency, which is a considerable advantage given the recent introduction of UAE corporate income tax.
Yeah, and also I think the wealth consolidation objective of a foundation is really key. I don't think we can underestimate the considerable wealth that is and can be consolidated under such a structure. And then, of course, once we've put these structures together, put the assets in it, in theory there should be nothing stopping a founder from leveraging their wealth against the foundation and diversifying that into other areas.
Yeah, absolutely. And this leads us beautifully to the opportunity that leveraging a foundation's assets presents for the founders and for the lenders. So let's start with the founders. Why can you describe what is the opportunity for founders to obtain financing via the foundation structures?
Yeah, absolutely. I mean, this is really important. I mean, we find that traditionally GCC nationals or families have sort of traditionally been very, conservative when it comes to investments, preferring investments in public market equities and predominantly real estate. We've seen a bit of a shift. There's this sort of perception of risk that's changed, perhaps a knowledge and understanding of markets a bit more, broader access to different investment types. And for us, we whenever we advise founders and high net worth and ultra high net worth clients and families, we really want to encourage diversification of asset base, limiting risk by not being too sort of narrowly invested in a single asset class and not putting all eggs into one basket. So for a foundation, one of the things we advise on is perhaps releasing equity in unencumbered real estate assets that are perhaps owned by the foundation. If you think you've got all of an asset base in say local UAE real estate that's owned by a foundation, we want to be encouraging families to sort of de-risk against a single asset class in a single jurisdiction. How do we do that without sort of selling down the assets? One of the ways that we can do it is by leveraging these assets, so releasing equity in the real estate, for example, using the equity that is released and using these assets to invest in something that is not real estate, that is a diversifier to what they already hold. So this is a sort of automatic tool to help them diversify their portfolio, which we think is really important.
Yeah, absolutely. And makes perfect sense. So founders have the opportunity to leverage their wealth held by the foundation to obtain financing to then be used to diversify their investments. Perfect sense. But what about the lenders? What do they stand to gain from this kind of lending to foundations?
Yeah, look, I mean, it's a huge benefit to the local banks, the local lenders as well, because they get, they stand to benefit from, the interest that they'll charge on the financing, arrangement fees for putting the loan in place, and then of course the opportunity for them to increase their assets under management, because at the end of the day, they're if it all goes to plan, the foundation will be releasing equity, will be releasing funds to then put somewhere. If the bank has done their job well, if the lenders done their job well, then they have an opportunity to win those assets. So there's a real chance, an opportunity for them to increase their AUM, their assets under management as well. So we see this opportunity, I think, particularly with private banks, who can sort of who has that have that toolkit in place to service the clients, not just from the lending perspective, but also from the investment and asset under management perspective as well. So we think if it all comes together, it provides both foundation and founder and bank a really sort of strong foundation, excuse the pun, for a longer a longer, more sustained relationship.
Yeah, so absolutely. It's clear that there are benefits then for both the founders and the lenders from lending to foundations. But interestingly enough, despite this, when we conducted our survey, it was very revealing that while there is appetite for lending, there are just not enough lenders, in fact, lending to foundations, and particularly those foundations holding and offering Dubai real estate as security. And furthermore, those that are lending are doing so on very conservative terms, to the extent that the terms are arguably quite disproportionate to the risks of the lending. So, I mean, one of the key findings from our survey is that there is considerable gap between founders who want, and in some cases need, financing, and lenders who want to lend, but don't seem to have the confidence or the knowledge to do so on reasonable terms.
Yeah, I mean, this was really the eye-opening part about the survey and the research that we did into this. From our perspective, there seemed to be a real gap in the market for this type of lending. We had the founders coming to us, GSB Private Finance as a sort of intermediary and brokerage on this, and asking us to source them the lending for this. We were going out to the market and just not really finding that there were the solutions available for them. So there was a real disparity between the advice that was being given on the structuring side of things and the solutions that were in place to service this. So as part of the survey, it was really about digging down into this, to speaking with the local banks, speaking with the lenders, trying to unpick it all and trying to find out what the issues were and why there was this disparity. And it really narrowed down to what we perceive to be three sort of primary factors causing the gap. Now, the first one was a perceived lack of recourse against the assets. Lenders seemed particularly reluctant to lend to foundations holding Dubai real estate, I think through fear that they might not be able to enforce their security against the asset, perhaps with the structure being how it is and set up. So that was that seemed to be a real issue whenever we were talking to the banks, was this sort of lack of recourse. And because of that, the lenders were taking a very conservative approach to these types of conversations. Loan to values were very low, and pricing seemed more expensive to compensate for the risk. And I think that then sort of leads on to what we found as a sort of second cause, which was there was a real just general lack of understanding about what a foundation is and what its purpose is. And I think this probably drives a lot of the issues surrounding the lack of recourse point, because if you don't really truly understand the structure and how it operates and what that recourse up to the top is, then you're not going to be in a confident place to lend to it. So the lack of understanding about these structures, I think, was probably the biggest thing for us, that the banks just didn't really get them, and because of that, they hadn't really formed the sort of lending policy and the lending guidelines for this type of lending. So that was a big issue. And I'd say that the last one, and again, it probably all comes from the same issue, but the last one we found was this type of lending was sitting in the wrong areas of the local banks. So for us working in more in the sort of private client advisory world, a foundation, when we recommend it, is a sort of private wealth structuring tool. But because it's a sort of non-personal entity, if you like, it was being sort of categorized as more of a commercial entity, and therefore sitting in the commercial or corporate banking teams within the local banks. Now, you and I know that's not where they should be sitting. These aren't corporate entities that have X amount of turnover and trading business and all that sort of stuff that corporate bankers would expect to assess as part of a lending transaction. So when we were speaking with the banks where this type of foundation lending was sitting in the corporate and commercial banking teams, the bankers had even less of an understanding about them, because they weren't used to seeing this type of structure as an entity in their side of the bank. So it was a combination of all three. And I guess the biggest takeaway for us is, because there's maybe this perceived lack of understanding about them, it's probably why they're then not sitting in the right side of the bank. And if they were sitting in the right side of the bank, and people understood them, how they operate, that would probably lead through to there being less of an issue about recourse. So they're all sort of intertwined, but Absolutely. They were sort of the primary reasons that we found for the problems.
Yeah, absolutely. And we've highlighted that in the white paper. So coming down to the white paper again, so we did propose several immediate actions which could address this particular gap. Perhaps you can just run through what we had identified.
Yeah, look, I think we're keen to sort of raise the profile, educate, if you like, and it's without sort of sounding, patronizing to the banks, but we feel like there's a sort of this lack of understanding, almost this sort of training of the banks into what a foundation is and how it operates, how they work. So I think education's really, really key. From that education, I think lenders can ensure that the right team is servicing a foundation, building that policy and guidelines around the lending that we found was really lacking. And to give you an example on that, we found that whenever we approached a bank to say, look, is this a type of lending that you can consider? They might, they said, yes, perhaps, but they couldn't really tell us exactly on what terms, that type of a lend would be in terms of, the pricing that was charged, the loan to value, the types of arrangement fees, everything that you want to be able to understand at the front end of the process, so you can make an informed decision as to whether or not, this is the type of facility that you want to proceed with. So I think that education will flow into the banks getting better at putting that guidance and policy in place. And that in turn will then get them more comfortable with the range of security options available under the foundation, and, you know, the legal rights, the enforceability. So look, it's definitely a work in progress. You know, I think since we started this bit of work, we're already seeing, you know, there is progress made, you know, being made by the banks. There's a lot of work going on under the bonnet. So I think it is, you know, it is, I think time will tell with this, but we're confident that the right things are happening locally for this to be more commonplace, you know, within the sort of structuring world.
Yeah, absolutely. I completely agree. I think it's absolutely all about raising awareness, and it's very intertwined. And I think we're privileged to be in an environment where we are responsive to these changes. So it's just now a case of making sure everyone can be rising together as the wealth structuring tools evolve. Then the lending products guidelines processes need to also respond. And particularly keeping in mind that we do have over 1,000 registered foundations, and we expect that number to rise. It's really a perfect time to raise awareness, get up to date with these new trends. So really, the sooner the lenders get on board and start becoming attuned to foundation structures, the quicker that gap can be closed and the benefits can really be realized by all the parties. So thank you very much for your time this morning, David. It's an absolute pleasure to speak with you as always. And I look forward to continuing to work with you on this very interesting area of private wealth and as it continues to grow. Fantastic. Have a great day.
Thanks, Hermione. Take care.